Amsterdam. August 1602. A cloth merchant sits at his desk. In his hands a piece of paper. He turns it over, reads it again, holds it toward the window. It promises nothing he can touch. No land, no gold, no warehouse full of goods. Only a share in ships that haven't sailed yet, toward islands he can't name, for spices he has never seen. Around him, 1,142 others are holding the same piece of paper. Bakers, carpenters, small traders, ordinary citizens of the Republic. This has never happened before. Anywhere, in any country, in any century. The world's first publicly traded company just opened for investment. What the cloth merchant didn't understand, he wasn't holding a financial instrument. He was holding a weapon, and the target was the most powerful empire on Earth. 22 years earlier, 1580, the Iberian Peninsula. The Spanish king inherits the Portuguese throne. 2 empires, 1 ruler. Together, they control the sea routes to Asia, Africa, and the Americas. Their combined fleet is the largest in the world. Their monopoly on the spice trade is total. At the same time, the Dutch are fighting a war of independence against Spain, a war they have been losing for 12 years. They cannot match Spain with armies. They don't have the manpower. They don't have the gold. The Dutch provinces were among the most valuable territories in the Habsburg Empire, not for their land, not for their armies, but for their ships, their trade networks, and their capital. It was the reason Spain refused to let them go. What they had was Amsterdam, and Spain knew it. Amsterdam was after Antwerp, the most sophisticated trading city in Europe. A merchant culture that understood capital, risk, and return better than any royal court on earth. So they turned that against their enemy. If you cannot defeat an empire with weapons, you build one of your own, not with castles and cavalry, with ships, monopolies, and money. The scale required was enormous. Hundreds of ships, thousands of men, forts across 2 oceans. The scale was so enormous, no single merchant could fund it. They needed a structure that had never existed. March 20th, 1602. The Dutch Parliament hands a group of merchants something unprecedented, a charter. 21 years of exclusive trade rights across all of Asia. The right to build forts, sign international treaties, raise armies, wage war. Not a government, a company. They called it the VOC, Verenigde Oost-Indische Compagnie, the Dutch East India Company. And then came the part that changed history. For the first time, ordinary citizens could buy a share in the company, not a product, not a ship, a piece of the company itself. The minimum investment, 3,000 guilders. The price of a canal house in Amsterdam. No title required, no connections needed, just capital. This is the first mechanism, shared risk at scale. Before the VOC, an overseas trading expedition worked like this. A group of wealthy merchants pooled their money for one voyage. If the ship returned, they split the profit. If it sank, they absorbed the loss together. This worked for one ship. It couldn't scale to hundreds. The VOC changed the structure entirely. Capital was pooled permanently, not for one voyage, but for the lifetime of the company. Investors couldn't demand their money back at the end of a season. They could only sell their shares to someone else. This is why the Amsterdam Stock Exchange was founded in 1602, not as a market for speculation, as the only exit mechanism for VOC investors. You want it out? Find a buyer. The company kept the capital, but there was more. Before the VOC, if a trading expedition failed and left debts behind, the merchants who funded it lost everything: house, possessions, reputation. The VOC changed that. Investors could lose only what they had invested, nothing more. That changed who was willing to participate, without risking their livelihood. In August 1602, the Dutch public invested 6.4 million guilders. 2 years earlier, the British had founded their own East India Company. The Dutch raised 10 times their starting capital. The VOC's target was simple: control the spice trade. For almost a century, that trade had been controlled by Portugal. And since 1580, Portugal answered to Spain. The same Spain the Dutch were fighting. The VOC wasn't just a trading company. It was an economic attack on the enemy's most valuable asset: nutmeg, cloves, pepper, mace. In 17th century Europe, spices were not seasoning. They were medicine, preservation, and status. A pound of nutmeg in Amsterdam cost more than a skilled craftsman earned in a month. And the VOC moved to corner the supply. That meant going through Portugal. The VOC didn't negotiate. It had its own army, its own warships. It attacked. Portuguese trading posts across Asia were seized one by one, their ships captured, their routes taken over. The markup, 14 to 17 times the purchase price. A pound of cloves bought for 1 guilder in the Moluccas sold for 17 in Amsterdam. This is the second mechanism: monopoly pricing at continental scale. By 1669, the VOC had been operating for 67 years. Over 150 merchant ships crossing the Indian Ocean. 50,000 employees across 4 continents, all working under a single corporate flag. Ports from Ceylon to the Cape of Good Hope to Bengal. Not a country's flag, a company's. The VOC's valuation in 1669 in today's money: $7.9 trillion. Apple, Microsoft, Amazon, and Saudi Aramco combined don't reach that number. And ordinary citizens owned it. The baker who invested in 1602, the carpenter, the small trader. Their shares had multiplied. Dividends arrived every year, sometimes in cash, sometimes in the early decades, literally in sacks of the spices that had built the empire. Power had always belonged to those who inherited it. Land, titles, armies, these were not for purchase. The VOC had changed that. For the first time in history, empire was investable. But the same instrument that built the empire began to consume it. The VOC's shareholders expected dividends every year, regardless of performance. From the 1690s onwards, the company paid out more than it earned. Not once, not twice, decade after decade. The gap was filled with debt. The debt grew. The debt-to-equity ratio climbed from 2 to 18. The machine was still running. The ships still sailed. The ports still operated. But underneath, the structure was hollow. By the late 1700s, corruption had replaced discipline. Costs had replaced profits. And the shareholders, the bakers, the carpenters, the small traders, kept receiving their dividends. Funded not by trade, but by borrowed money. In 1799, the Dutch government dissolved the VOC. Its debts were taken over by the state. The shares lost their value, but the dividends that had been paid out over decades remained untouched. The shareholders kept what they had received. The losses were paid by the Dutch public. The world's first corporation had been destroyed by its own invention. In the decades that followed its founding, the VOC had systematically dismantled the Spanish and Portuguese spice trade, route by route, port by port. Their revenues collapsed, and with them, their ability to fund the war against the Dutch Republic. Amsterdam, 1750. The cloth merchant from 1602 is long dead. He celebrated the independence in 1648, after 46 long years of war. In his house, his grandson opens an old chest. Inside, a piece of paper, yellowed, creased, his grandfather's name at the top. He never knew what it had funded.